case. You can purchase a house with 3% down, which is actually lower than an FHA down payment, if you have a decent enough credit score and it makes sense. Now, the only thing is you have to be a first-time homeowner to be able to qualify for that. Hey, how's it going? Thank you for joining me on this week's episode of The Real Deal. This week, we're going to be talking about credit. Yes, credit. It's a subject that I brought up in the past, but throughout the years, the guidelines have changed. And I said, you know what? It'd be a great time for a refresher. So let's talk about some of the minimum credit score requirements, some of the more mid-range credit score requirements, and of course, the optimal credit score requirements, and some of the benefits that you'll get, obviously, at a higher credit score. So let's talk about, the entry level, right? So at what point could you qualify for a mortgage, regardless of down payment? And that's a 550 score. So you could potentially qualify for a house with FHA financing with a credit score as low as 550. However, typically at that low of a score, you're going to require a large down payment, 10% down. And you might be asking yourself, first-time homeowners, they really don't have 10% down. And you're right, typically they don't. However, this is probably going to be more geared towards somebody like, let's say somebody bought a house, right? And they owned a home, they had some hardship, and they sell their house. Now they have a ton of equity, but they want to turn around and buy their next house, and they just can't get to conventional financing yet. Well, this would be the way that they could do it. They could still purchase a house with the score as low as a 550, but it's going to require that larger down payment, 10% down. The next tier up is going to be a 580 credit score. So we're still not in down payment assistance range. At a 580, you can qualify for FHA financing with 3.5% down. If you're right at the cusp of 580, one thing that I want you to consider, if you're looking at apps, right? If you're looking at Credit Karma, Experian, your bank, a lot of banks and credit card companies will offer these free credit scores. Those scores aren't the ones that lenders use. There are different credit ratings per company. So like TransUnion uses one, Equifax uses another one, Experian uses another one, and then it's not the same. Like usually you're going to get like your FICO score at 8 when you pull up these credit card apps, but the one that you're looking for is going to be different when you're actually applying with a lender. And there is no set number. Like it's not always automatically lower. In some cases, it could potentially be higher, where somehow your score ends up being higher with what the lender pulls. I wish I could give you a rule of thumb. Sometimes it could be 20 points off. Sometimes it could be 5 points off. Sometimes it could be 30 points off, right? Of course, the best way to know is to, talk to a lender to know exactly what your score is. Now, there is an app that I have used in the past. It's the MyFICO app. I'll add a screenshot of that. And the MyFICO app will give you the actual score that the lenders use. There's a prompt. There's a option that you can select that will give you the actual score that the lenders use. However, it does come at a cost. It costs you $30 a month to monitor your score with this app. So if you're actively going through like a credit repair process and you want to be able to gauge exactly where your score is at, it's a good way to take advantage of that tool. However, if you're working with one of my lenders, these services are free. You don't have to pay to get your credit score pulled. You don't have to pay to get credit recommendations. But that's just an option if you want to do it on your own. So at a 580 credit score, you qualify for FHA financing, and this is with your own 3.5% down payment. You're capped at a purchase price of about $460,000 with FHA financing. So just keep that in mind. If you're looking at a higher price point, you're either going to have to cover the difference with your down payment. So if you're a seller that has a lot of money left over from selling your house, then you're just going to have to close that gap. But if you're a first-time homeowner and you're looking at higher price points, unfortunately, that's your only option if you're at a 580 credit score. The next tier is going to be 600. So 600 still doesn't get you into conventional financing. 600 credit score does, however, get you to down payment assistance. Now, down payment assistance, you get your down payment covered. You could potentially get your closing costs covered at the cost of a higher interest rate. You're going to have some of these benefits. At 600, that went down pretty drastically. It used to be at a 640 and it went down to a 620. Now you can take advantage of these down payment programs with a score as low as a 600. So that's really great, but still you're going to be in the FHA credit score range. The next tier above that, 620. So 620 will get you into conventional financing. That's going to get you into the higher price points. That's going to get into the $650,000, $660,000 price points. However, if you're at a 620, 630 credit score and you're going to be hit with a higher interest rate than if you were going FHA. So 620 isn't going to be ideal even if you qualify based off of the minimum score requirement for conventional. Sometimes the lenders won't be able to process that through, and they won't be able to get an approval, and you'll have to aim higher. So that's kind of the bare minimum. The only time I've seen clients really take advantage of conventional financing with the 620 credit score is if they have a ton of money down, right? So this is, once again, a seller or somebody that, you know, has a bunch of money in their savings that is putting 20% down. Typically, this is the only time that I've seen somebody qualify for conventional financing at that 620 credit score. Most of my clients that qualify for conventional financing where it makes sense to go conventional is going to be closer to like a 680. 680 is really where you start getting a more, a decent interest rate. And also, one big thing to consider with conventional financing, your interest rate and your PMI rate, your private mortgage insurance that you put down, that's going to vary based off of your credit score. So FHA financing, it doesn't matter if you're at a 550, a 600, a 700. FHA financing, your PMI is going to be the exact same. It's 0.85%. With conventional financing, depending on how high or low your credit score, your private mortgage insurance is going to be either lower or higher. So, conventional financing is the better option to go with if it makes sense. If you're at like a 640, 660, and you're looking at a lower price range of like 460, 430, 400, then FHA is still going to be a better option for you because it's going to be cheaper for your monthly payments. Now, once you get to that 680 range, once you get into that 700 plus range, that's where conventional just makes more sense. A couple different reasons why. 3% down, so it's obviously it's even a lower down payment than FHA financing. Traditionally, people think that you can that FHA is the only way you can get away with conventional financing. That's not the case. You can purchase a house with 3% down, which is actually lower than an FHA down payment, if you have a decent enough credit score and it makes sense. Now, the only thing is you have to be a first-time homeowner to be able to qualify for that 3% down option. If you purchased a house in the past and you want to use conventional financing, your absolute minimum that you can do at that point is 5% down. Now, the reason why conventional is a better option than FHA is because you're going to be able to get rid of your private mortgage insurance without having to refinance your house once your house has appreciated in value. So that's a really good thing. If you're buying a house and you're making some upgrades, 5 years down the road, the house is now worth more, you don't have to refinance. Whatever rate you locked in, that's your rate. You can get rid of private mortgage insurance. You can't do that with FHA financing. That private mortgage insurance is going to be on there for the life of the loan. In addition, if you have additional funds, and this is a very common conversation that I have with clients, if you're putting 3% down, 5% down, ideally, you can prepay your mortgage insurance when you're using conventional financing, and that will reduce your monthly payment, a couple $100. Once again, this only makes sense, though, if you're at these higher credit scores, because if you're at a lower credit score, like 640, 660, it's going to cost you way too much money to prepay that mortgage insurance, and it's just not going to make sense for you to do that. It'd be better for you just to carry that private mortgage insurance on your monthly payment. And then if you're looking at higher price points, if you're looking at, the jumbo loan products, and jumbo loan is basically anything above like a 660 price point. If you're looking at 7, 8, 900,000 plus, then you're going to want to be an absolute minimum. I do have lenders that can go jumbo loan as low as a 680 credit score. However, ideally 700 will open up your opportunity to more options. But that would be the requirement if you're looking at higher price points. I do have some jumbo loan products as well with as low as 10% down. Traditionally, those have been 20% down. However, I do have lenders and investors that offer a 10% down jumbo loan product, which is phenomenal. So that gives you a general idea of where your credit score range needs to be based off of different options and different price points. Now, if you're in a situation where, either you're in credit repair, you've had some issues in the past, or simply you want to put yourself in a position to be at a higher price point to qualify for conventional financing, to qualify for a jumbo loan product. The lenders that I work with, they give you these credit recommendation service is at no charge to you. So they'll give you these recommendations and let you know what you need to do to get your credit score at the specific point that you're trying to get to it. So that way you're not overshooting it or you're not undershooting it, because a lot of times as clients, as consumers, we try to do as much work as we can before we get to that, lending table, but don't do that. If you're in this situation, talk to my lender so that you can get these recommendations so that way you can hit it right where you need it to be and you can get that score rescored within 3 to 5 days as opposed to having to wait, 45 days, which is typical. So as you can see, there's a lot of moving parts. There's a lot of different information there, but use this video to give you a general idea of where you need to be. If you feel like you're ready to take that next step, reach out to me. We'll have a conversation. We'll set you up on a good game plan to get you started on your home search. Thank you much and take care.